Alright guys, welcome back to the another video of our channel Trading Dolphins. So today in this video I'm going to be sharing about all the technical analysis, how to do a technical analysis of a stock, crypto or any other market segment that you want to do or you want to invest in the market. So right now over there you can do. So without wasting any more time, let's start our today's video. So in this technical analysis video, first we learn that the price goes like this, right? So let me do it blue color. Okay, so we all know that price when goes like this, it is called an uptrend, right? And meanwhile, the price if goes like this, we call it a downtrend, right? So the moment when price goes up like this and make a high and takes a pullback, and when it breaks the high of this level, the level is called now a support, right? And again makes a high and comes down and makes a pullback. So this level we call it as a resistance, right? And again from this level the price breaks the resistance, and when the price breaks this resistance, the level is called as a support, right? And during this support only the price again takes a pullback, and from there only it goes up, right? And again whenever the price is making a high we call it as a resistance, and when the price is going up breaking the resistance, then it becomes a support, right? And this is whole cycle of an uptrend. Now the concept of a downtrend. So whenever price is coming down making a low, we call it as a support, right? We call it as a support. When price goes up, takes a little bit pullback and breaks this support, we call it as a resistance. And from this resistance makes a low, and we call it again a support right over here. And again from this resistance only price comes down, breaks the support level, and again reaches to its resistance level, that becomes now a primary resistance level. From there the price again starts to come down, and this is the whole cycle of an uptrend and a downtrend. So now we will be talking about a sideways market, right? Why this happens, why price goes like this, right? So the way first price goes up and comes down, it called as a resistance level, right? And the way from whenever it goes up we call it as a support, right? So again the price goes up and touches the resistance level and comes down, and again it price comes closer to its support level and goes up, again touches the resistance level and comes down, again touches the support level and goes up, and touches the resistance level and comes down, and again goes up, touches the resistance level and comes down. It's called a support. And now this is called a resistance, and now it is called a support. In simple term, support is a level where buyers are activated over this zone. Whenever price reaches to this zone, buyers are activated, gets their confirmation, and price goes up. And resistance is a zone where sellers are activated, and price when reaches this zone, the sellers are Harvey becomes Harvey, and price drops from there. And this whole cycle we called it as a sideways market, right? Okay, let's understood now the whole market cycle works. So whenever there is a long huge pressure, price always goes like this, right? Price goes like this. Whenever there is a big push, it goes like this, and then after there is a big push, the price starts to stalls over here, right? Price is stalling over here, and slightly after some time the price breaks the support level, making a pullback, face the rejection from the upper side, and then again making a level of downtrend, right? And again coming to its new sideways level. So this is the whole condition of the market cycle. So whenever the money is coming to the market, price goes like this, right? Slowly it starts to go up, right? Whenever the money is into the market, Now the price will start to stall, and over there only the most retail traders are the more retail investors are ready to buy. Like over this point of period of time, the retail traders starts to buy, and from this level they got stuck due to all the money is being in the market, and now the big player will try to move their money out, and slowly they will try to make them out, and the retail investors and will get stuck. So the retail investors have gotten over entry over here, and after some time the big players will start to moving out their money right over here, and the whole retail investors, those who have invested over here will go trapped, and again the whole downturn starts to make. And this is how the whole market cycle of the stock market or of any stock happens, right? Obviously 100% will not be like this only, but the cycle always remains like this. First there is will be a slightly a sideways market, then the money will come into the market, the price will go up, then when the money is in the market, and now the retail investors will make their entries over here, right over here, and the market will get sideways. After some time the big players who have just invested their money, some days later they will start to move their money out. Like slowly the price will come down and it will peak crash like this, and it will become peak crash, and the whole stock will be dumped again, and the investors who have entered over here, they will all trapped over here, and they will have a big negative ultimately, right? So I think this is the whole structure of the technical analysis. Now we will let's see the chart. So now let's move on to the chart section. So there is an example, right? See what happens over here. See, it is just one when I will be uploading this video, it is just 1 week before chart. It is not very old chart, this is just recent chart. See, you can also see this is the point when Bitcoin made the high, and so this is a live just recent example I am just showing to you guys. So now over in this case, just see the price was making sideways over here, right? So the money, the big players putting their money in the market, so the price is going to up like this. When they just put their money in the market, the price starts to stall over here, and the most of the retail traders make their position over here, because the whole rally was beautifully continuing, but over here there is a slight pullback, and we can see that during this pullback only the retail traders have entered in the market, and price goes slightly up, and at this moment the price is become sideways again, and then the price starts to slowly come down, takes a little bit retest, and then the whole stock gets dumped right over there. See the example just now I have told in my theory class. You can see how ridiculously it just matches my experience, like my example, my whole structure that I have just shown you in the theory class. This is the same example right over here. So you can understood how the market cycle of a stock or of a market works. So now let's give some example of a support or resistance. So let's see. At this point, what you can see, the price was going up. Wait, let me zoom it a little bit. Okay, now it is clear. So the price was in an uptrend like this, then the price is going down, making a lower low, lower high, lower low, lower high, and this at this point the price got stuck. So this phase is called a sideways market, right? Just shown in my theory class, right? So this is the point of time when price neither goes up or down, neither goes up or down, and stuck in a similar phase, right? This is an example of a sideways market, right? So okay, now what you can see over here, the price is going up, making a lower low, then over high, break the support level, comes down little bit, from this respects this support level over here, again goes up, there is a support level, goes down, take a retest again, and again goes up. Support level. So from this support level only, price comes down, respects this level, again goes up, and then becomes a sideways market, right? So this is the scenario of an uptrend market. All right, let it be very clear. So now there is a very good example of a downtrend market, right? Price was coming down, then makes a pullback, then again breaks the low, over again pullback, comes down, low, comes down, high, comes down, then again this is the example of a downtrend, right? This is way how you can understood all the levels. Now the most important fact, the one who is doing a 9 to 5 and the person wants to put their money in the stock market and doesn't know how to do a technical analysis. I have shown you exactly how you can judge, but this is not a game of 1 day or 1 hour, or by watching this 10-minute video you cannot understand any technical analysis. I know this is very ridiculous, I am saying these bold things, but this is only the truth. By seeing a 10-minute video you cannot understand, so but still you want to make money, you want to do SIP in stocks. So I'm telling you an indicator. The name is indicator is super trend, right? You will just go to the indicator section and write super trend, and the first indicator, that is over here, it will come. So now you can see that whenever the price is going up, it automatically gives a signal to us that its price is going up. So now it's a time to hold the market, right? So at this point, the market is red, giving a signal of a downtrend. The price goes down, right? By this way, even you are doing a 9 to 5, you can put your money in the stock market and make money, right? So now you will see that there is a setting option in the indicator section, right? You will go to this setting, and in the section of the inputs you do 20, right? And in factor section do it 2, 20 and 2, right? And see, okay, now you can see that the portion of the indicator become more accurate, right? So now you will be getting confirmation more earlier and more accurately. See, the way it is going uptrend. So from this point it starts to get uptrend. The price gets gives signal over here. If you take your position over here also, you exit over here, right? So how much percent it is? It is 2.25% within 9 hours, and you are just doing nothing, giving signals from this indicator. You are just watching it and putting your money, right? Again over here, price gives signal, you took your entry short position, exit over here, right? See, 1.5% within 10 hours. So you, for investing 1 lakh rupees, you can get 1,500 rupees uh within 10 hours, right? And you are just doing nothing. So example, right, for example, when you are when you will be getting out from your house to do 9 to 5, so you just put your money in the market, and in the evening time you will receive hand to hand and with a very good accuracy. So obviously it all the time it will not show you the right result, but if you do in a long term basis, eventually you will show profit in your portfolio. So over in this section also, this is given a green signal, but in the end it didn't work out, and it is more like dumb section, right? So this indicator basically works in a longer time frame. Though my time frame is 15 minutes, if you switch to daily time frame, it will show you a great result, right? So if you're, for an example, if you're just investing in the stock market, right? I'm just putting my chart very in the low portion. So from this portion, right, very low, when the Bitcoin price is like approx 17,000. So at this time it gave a signal over here at 17,000, right? You put your money over here and you just sell your money approx 22,000, right? So how much percent gain it is? If you calculate, it is 25% return. In how many days? 29 days. In a single month, you are claiming 25% return. If it means if you're investing 1 lakh rupees, you are immediately getting 25,000 rupees within a single month. Within a single month, right? Again, and please learn little bit of technicals. Do not blindly trust on this indicator, because this indicator all the time it didn't work out. Because for an example, when you know that Bitcoin is in an uptrend, at that time why you will take trade from the opposite side? For an example, the indicator have gained signal of a downturn over here, and now if you took it, it will stock you out, right? But ask yourself whether you want to be with the trend or you want to be against the trend. It means whether you want to swim with the flow of the river or you want to swim against the flow of the river, right? You obviously want to flow with the flow of the river, right? So when the trend is an uptrend, always take long positions. Whenever it is going in a downtrend or it is showing a red signal to us, you take a short position, right? So whenever you take a green position, most of the cases, you see, there is a 35% return. Again, in 1 month, in approximate 1 month, it is 35% return. It means first month you have gained like 25,000, next month you have gained 35,000, right? And the second thing is, if you took over here, yes, obviously it stopped you out. And if you stopped you out, then your stop loss is also becoming 2%. Sorry, it is not 2%. Approximately it is coming 7%, right? 7%. If you are gaining 35% and 25%, 2 months, and then you are losing 7% also, what is a bad thing in this? So learn risk management. So if you want a video on risk management, so let me know in the comment section. I will make video on the risk management. So I hope that you all have understood what I'm trying to say in this video. What are the technicals, how to see technicals, and what are the key levels that you have to look on it. So how to be with the trend, not be against with the trend. So yep, so this is up to this on this video. Hope that you like this video. If you like the video, then please smash the like button, subscribe to our channel Trading Dolphins, and share with your friends and family across everywhere, and stay tuned. Till now, keep watching.